over $30 million in short positions, one price level, and if Kaspa hits it, we're about to witness a liquidation cascade that could send this thing vertical. But here's what nobody's talking about. While retail panics and dumps their bags, whale wallets just quietly added another 6.5 KAS. So either these whales are completely delusional, or they know something the rest of the market doesn't. And judging by what's forming on the chart right now, I'm betting on the latter. Hey everyone, welcome back to the channel. If you're new here, I break down crypto charts and market moves without the BS, just pure analysis and a bit of humor to keep things spicy. Do me a favor, smash that like button, subscribe if you haven't already, and turn on notifications, because what's brewing with Kaspa right now is something you absolutely cannot miss. Let's set the stage. The entire crypto market just went through a brutal liquidation cascade. Blood everywhere, portfolios getting wrecked, and Kaspa, it got absolutely hammered along with everything else. But here's where things get interesting. While most altcoins are seeing traders rush back in trying to catch the bounce, Kaspa's open interest is still drifting lower. That's right, it's actually declining. Now, at first glance, you might think that's bearish. Fewer traders, less speculation, less hype. But experienced traders know that this is often the calm before the storm. According to market structure analysis, when open interest drops, after a major flush, it means all the weak hands and over-leveraged degenerates got shaken out. The casino's been cleared, and when the real move starts, there's nobody left standing in the way. So while everyone's sitting on the sidelines scratching their heads, waiting for, clearer direction, the big boys are making moves. Wallets 7 and 9, two of Kaspa's largest holders, just casually added another 6.5 KAS to their bags. Not selling, not panicking, accumulating. While retail is busy panic selling into their hands, these whales are building positions like they're preparing for something massive, and that's not even the juiciest part. Take a look at the daily chart, and you'll spot something that should make every technical trader's eyes light up. A textbook bullish divergence forming across three major indicators. Price is making a lower low, but check this out. The RSI is making a higher low, which means selling momentum is weakening. The MACD is making a higher low, so bearish momentum is losing steam. And the OBV, the on-balance volume, is also making a higher low, which signals accumulation is happening despite the price dropping. When price moves one direction but momentum and volume move the opposite way, that's not noise. That's the market telling you a reversal is cooking. It's kinda like watching a rubber band stretch too far. Eventually, it snaps back. Let's talk about the liquidation trap that's about to spring. According to Kaspa Daily, a well-known crypto data account, there's over $30 million worth of short positions sitting just above the current price, clustered around the 6.4 cent level. That's a massive wall of shorts just begging to get squeezed. Right now, Kaspa's hovering just below that critical zone. If bulls can push the price even slightly higher and break through 6.4 cents, we're looking at a potential short squeeze that could ignite a sharp rally. Why? Because all those traders betting against Kaspa would be forced to buy back in to cover their positions, and that buying pressure just feeds on itself. It's a domino effect. One breakout candle triggers liquidations, which triggers more buying, which triggers more liquidations. We've seen this movie before with Bitcoin, with Solana, with every major altcoin that's ever had a face-ripping rally. And here's my take. This setup looks cleaner than most. The shorts are overloaded, open interest is low, meaning there's room for fresh capital to flood in, and the chart structure is screaming accumulation. Okay, so let's break down what the chart is actually showing us. Kaspa Daily pointed out that the structure forming on the daily time frame looks suspiciously like a Wyckoff accumulation phase. Now, if you're not familiar with Wyckoff, it's a classic market pattern that happens before major uptrends. Basically, after a long decline, the market moves sideways while smart money quietly absorbs supply from weak hands who are selling out of fear or impatience. During this phase, you'll often see a spring, which is a fake breakdown designed to trap the last wave of sellers. It looks like the bottom is falling out. Everyone panics, and then boom, the price reverses hard. If that spring has already happened with Kaspa, and I think there's a solid chance it has, then we're entering what's called the markup phase. That's when the price stops messing around and starts trending upward fast, catching everyone off guard. Now here's why I think traders are getting increasingly bullish on this. The structure is clean, support is holding, whale wallets are accumulating. And most importantly, shorts are stacked up like dominoes waiting to fall. The $0.064 level isn't just some random resistance line, it's a pressure point. If price breaks through it, all those short positions unwind in seconds, creating explosive upward momentum. I've said this before and I'll say it again. The best trades happen when the majority is positioned wrong. Right now, shorts are betting against Kaspa while fundamentals, technicals, and on-chain data are all pointing in the opposite direction. That's what we call asymmetric risk-reward. Let's also talk about the comparison that's been floating around. Some traders are saying Kaspa's current chart looks eerily similar to Bitcoin's structure right before it ripped from around $16,000 to over $126,000. Now, I'm not saying Kaspa will do a 7 times move tomorrow. I don't have a crystal ball, and anyone who tells you they do is lying. But fundamentally, Kaspa has a lower market cap than Bitcoin and arguably better technology. So if we see even a fraction of that kind of explosive move, early holders could see serious gains. My opinion? Don't chase. Don't FOMO. But if you've been watching Kaspa and waiting for an entry, this accumulation zone could be one of the last chances before the next leg up. The market doesn't reward impatience, but it absolutely rewards conviction. And right now, conviction is what separates the smart money from the noise. Alright, so looking at the short-term setup, Kaspa might consolidate a bit more before making its move, and honestly, that's completely normal. Markets rarely go straight up, especially after a major crash. But hey, if this Wyckoff pattern continues to play out as expected, the next target zone could easily be in the 7 to 8 cents range. Now, that's a 10 to 25% move from current levels, and if the short squeeze kicks in, we could see it happen fast. The key here is patience. Don't try to predict the exact bottom tick. Let the market show its hand. Watch for volume confirmation. Keep an eye out for a break above 6.4 cents, and watch for those liquidations to start piling up. When they do, that's your signal that the move is real, and honestly, the fact that most of you holding Kaspa are staying calm during all this chaos deserves respect. It takes real belief to hold through volatility like this. Panic selling is easy. Sticking to your thesis when the market's testing you is what separates winners from losers in this game. Alright everyone, that's the full breakdown on Kaspa's current setup. If this analysis helped you see the bigger picture, make sure to drop a like and share this video with anyone who's been sleeping on KAS. I've got more deep dives coming on other altcoins that are setting up similar patterns, so check out my other videos if you want to stay ahead of the curve. Remember, the best opportunities in crypto happen when fear is high and everyone's too scared to act. Don't be that person who realizes they should have bought only after the price has already doubled. Stay informed, stay patient, and stay convicted. I'll see you in the next one. Quick disclaimer: nothing in this video is financial advice. Crypto is extremely risky, and you should never invest more than you can afford to lose. Always do your own research, manage your risk properly, and understand that markets can move against you at any time. Trade smart, not reckless.